My name is Anthony Fatsis, and welcome to the What the Finance podcast, where we interview finance, trading, and investing experts to help you understand current market trends and learn about the intricacies of new and existing assets. If you enjoy the podcast and to help with the YouTube algorithm, please like, comment, and subscribe. It really helps with the podcast. That means we can continue to get amazing guests. Thanks again, and I hope you enjoy. So thank you so much, Chi, for joining the What the Finance podcast to talk with me today. On to my first question. Can you talk about yourself and maybe how you got into this investment journey, like all of us?
Okay, I think generally for me, currently just a little bit of background. I do run a YouTube channel as well. I do have a primary focus on Alibaba. So for those of you who do look out for Alibaba videos, if you type in, I hope that YouTube is ranking me pretty high up there. But for those of you who do not know, I currently talk specifically on Alibaba and China by and large. So a little bit about my background. I think I'm currently still a university student. So I'm currently studying one of the local universities in Singapore, and I'm based in Singapore. So I'm currently doing a double degree in accountancy and business. So that's about it about my background. So speaking about investing specifically, I think I started my journey around 4 to 5 years back. But I wasn't dabbling in the US market or even the Hong Kong or Chinese market because we are all more comfortable with our own local markets, right? So I was dabbling in a little bit of the Singapore market when I first started out. Wasn't spectacular because the Singapore market, for those of you who know, there really isn't much transaction volumes, there isn't much volatility. So a lot that we bought were just blue chip stocks, kind of companies that were guaranteed by the government. So in this case, you also wouldn't expect high returns, but at the same time, you also wouldn't expect like the government to interfere or like this companies to go bankrupt and stuff like that. So I only recently ventured into the US and China market after the COVID crash. I think that was also the time period where a lot of people start venturing into the US and China market because suddenly everything started looking cheap and everybody just wanted to go in and try to participate in the market. And also, of course, when there's so much liquidity and so much money being rushed into the financial markets, then everybody just wanted to try to take a jab at the market and see whether I can beat the S&P 500 or not. So that's just generally my own experience thus far.
Yeah, it's interesting because I remember before the COVID crisis, everyone's like, oh, all-time highs all the time. It's too high. It's too high. And we finally got that drop back. Because as you said, people just jumped at the opportunity.
Exactly. I think there was also a lot of blue chip stocks, especially those that are travel related, like people like Disney, Carnival. They were dropping precipitously and it was crazy like at that kind of valuation then.
Yeah, awesome. Well, I'm at university as well, so in the UK, so we're on the same
Great.
path at the moment. So you mentioned Alibaba there, and as you said, your channel is mainly focused on Alibaba as well as China, and I think you call yourself an Alibaba Evangelist. So, what attracted you to the company? When did you decide, I love this company, I'm going to invest in it?
I think it was a really interesting story. So it all started out more of because when I first started YouTube, I didn't announce it to my friends, my families, and whatnot. It was really a very interesting approach I took. I just wanted to start talking about finance and start talking about investing. And then you do realize that usually, at least on the YouTube platform, it's monopolized by a few creators, and most of them have very huge following. And some of them actually do cover stocks that also have cult-like following. So to name a few, like Tesla, Palantir, even now, I think Tattooed Chef and a lot of all the end-phase kind of companies, right? They all have huge creators that are pushing forth this kind of discussions surrounding these few cult-like companies. So on the flip side, I realized that, hey, if I were to start talking about US large cap stocks like Apple, Amazon, Google, I'm not too sure whether there is an audience for it. So I really started niching down. And then I came across, I'm not too sure whether you know of this channel called Ali Abdaal. He was saying you should understand what's your competitive advantage. And in this case, I was brought up in a country with a bilingual policy stance. So since young, I pick up both English and Chinese. And I think I'm still relatively decent at both languages. And I was also brought up in a very Chinese tradition kind of family. So in this case, I really took a very keen interest in understanding China, and also why is investing in China so largely driven by all the different sentiments, and why so many medias are pounding consistently on the different narrative and rhetoric. So in this case, I really just kind of identified there was a demand for this this side of, or this slant of on the YouTube space. And then I realized that, hey, I might be able to provide some of the supply in terms of information, in terms of my own understanding, and in terms of really that perspective that maybe other people are not able to provide, because we are brought up in different culture. All the more we also speak different languages. So in this case, I just tried to fit myself in. And then as I studied the China economy more, I started understanding more about the politics and stuff like that. Inevitably, I started getting more and more interested. So as I did alluded previously, we were all investing in big tech the other time, right? So Apple, Microsoft, Amazon all had a good run. And I started trying to find more value. So in terms of value investing philosophy, because my dad is also an avid investor, a lot of my philosophy, a lot of how I invest is really influenced by him since young. So since young, he's been recounting on, like, in the 2008 crisis, in the dot-com bubble, in the 98 financial crisis. He shared really personal anecdotes, and where, and especially during the 98 financial crisis, the Asian crisis, it affected Singapore a lot. And he actually lost friends where people took their lives, and how in the different investment environment, what actually happened and transpired. And he just shared all these nuggets of wisdom with me personally. But it's done usually in Chinese. So I just took it by heart. And since young, I started cultivating this kind of philosophy. So in this case, why Alibaba specifically? It's a very big question. I think just to unpack it separately, usually, in investing, we do a top-down and a bottom-up approach, right? So the top-down approach, I think, simply put, we cannot ignore China's growth, China's successes over the last 20 years. So it's inevitable that people will be betting on the Chinese economy. So people like Ray Dalio, even Charlie Munger, and all the different huge investors that wishes to achieve this idea of diversification benefits. It's true that, and I would like to quantify that, I still believe that the US is the greatest country of the world, and they will remain the greatest country of the world. But that said, it doesn't mean that they're not plagued with problems as well. So in order for you to really achieve diversification, or this idea of an all-weather portfolio, right, you have to diversify to emerging markets, into understanding who's the contenders, what are the alternatives. So in this case, it's inevitable that funds will start flowing into China as well. So on a top-down approach basis, if you were to think about it, the Chinese economy, even though there are projections by economists, GDP is going to surpass US, etc., etc. The thing that really struck a chord with me when Ray Dalio said was, just think about it, the GDP of China per capita today is around 11,000. And the GDP of US per capita today is around 60,000. China doesn't even have to reach 60,000. They just have to be half of US's GDP per capita. They're already twice as big, just because of the sheer volume and the sheer amount of people in China. And I'm also not expecting for them to even reach half, just a quarter, and they're equivalent to US's current stance. So in this case, if you put some thought in it, and you really believe that in this vision, and believe in this philosophy of the Chinese government really doing good for the people, trying to make the economy, trying to better them again, then in this case, it's quite a natural conclusion. When people get rich, what do? They essentially spend money. They want to increase the standard of living. And stuff like that just leads me to the conclusion that, hey, e-commerce is actually a pretty interesting industry to venture into. So that's one. Then when you look at it from a bottom-up approach, if you have to study a lot of their competitors, so like JD, Pinduoduo, and maybe some of the other social media platforms like TikTok is also currently trying to fight the e-commerce pie. In this case, I think Alibaba, the last 20 years, Alibaba has already shown that they are able to punch a little bit above their weight. They are currently leading the e-commerce pie. They are leading the cloud computing pie as well. And the competitors are no joke, by the way. You have people like Tencent. You have people that are, or most of the companies are backed by Tencent. So essentially speaking, if you were to really just dive deep and to understand the competencies of the management team, I think they've actually done a pretty good job in the last at least 5 to 10 years. And they've proven their worth. So on top of that, of course, I wouldn't go into the nitty-gritties of how the business model is far superior in terms of JD, Pinduoduo, whatnot. But in this case, coupled with the fact that the entire valuation haircut and how everything is being driven by sentiments today, it really feels like like how Charlie Munger says, it really feels like I wish to swing with all my might, because I don't see how this opportunity will be able to escape or come again in the near future, or anytime in the future. So that's just my 2 cents on why Alibaba.
Yeah, wow, that was so great. And you mentioned a lot there. And I think one thing that I was really surprised, let's talk about Singapore first, is that, as you said, it's a very Chinese cultural place, isn't it? So even though it's close to Malaysia, it was a part of Malaysia like 50, 60 years ago, but the majority of the population are Chinese or Chinese backgrounds. So it's quite interesting. Do you think that put you in the perspective to maybe focus more on China as well?
I think it's true, by the way, because if you were to look at the Southeast Asia region, I think most of us there are a lot of Muslim countries here. So like Malaysia, I think Indonesia, and some of the more, in this Southeast Asia region, I think other than China, if you ignore China as part of Asia, Singapore is one of those that actually is kind of dominated by Chinese people. But I would just like to qualify that I think at least from the founding fathers' perspective, we have largely been westernized. So a lot of people speak English is our national language. We converse in English, we learn everything in English, and a lot of our values are quite aligned with the Western culture. That said, we also understand that we are kind of a melting pot. So we do include a lot of different races and a lot of different culture. So it also even gives rise to this idea of a Singlish. So I'm not too sure whether you're aware of this term Singlish. So it's a mixture of all different languages. So if you were to hear me speak, it's usually a mix of many different languages in one, and maybe even dialects. So sometimes my pronunciation, my enunciation might be a little bit weird. My sentence structure might be all over the place, and my grammar, if I didn't pay much notice to it, it might even just be all over the place as well. Because this is the entire identity of being a Singaporean. So in this case, even though we are Chinese by race, dominated in Singapore, largely speaking, we are quite westernized. And I would think that most of our values and beliefs actually do align with the Western counterpart. That said though, I think the older generation or the earlier generation do still feel a heavier inclination to our Chinese ancestry. So we are really caught in between, and there's really this very interesting fusion of both cultures and identity.
Yeah, definitely. You could say it was quite similar to what Hong Kong was, say, 20 years ago or something, very Western, but still the multicultural place that it is. And you mentioned your father, like the Asian financial crisis, which was massive. And, I think some people, some countries lost 95% of the market capitalization of their company. So of their country, sorry. So do you think that that's really helped maybe some investors, especially maybe in Singapore and throughout Asia, not be, maybe put too much risk on and be a bit more cautious in how they invest?
I think in terms of that discussion, I think there are two parts. First part is on the people's mindset, and I do agree. I think largely speaking in our culture, I wouldn't speak for most of the people, but from what I observe, most of us are quite risk adverse. So we like to take high dividend yields. That's one. We like high generating cash flow. We don't really like what growth company and you tell me you promise me the stars and the moons. I think that's one part. And on the second part, I think the Singapore government do have a very large influence in terms of how our financial markets are being governed. I think if you were to think of it from their perspective, they're just afraid that the normal layman is being siphoned money out of, how would I put it, bad companies or people with malicious intention. So in that case, a lot of our financial markets and essentially our stock market, like the Singapore Exchange, it's highly regulated. And the government really do place a very strong emphasis. So whenever there are news like, oh, there is a rumor that happened, they will stop the trading of the company. So they will let you guys settle whatever rumors there are and stuff like that before they allow for trading to begin again. And from my own understanding, I think for the US market to stop trading, that's only when if the market suddenly had a flash crash. I think that's the only time. They don't care whether there were rumors or even I recently looked at the Trump spec, right? The Donald Trump's I've forgotten his media company where there was no revenues. People are just people are giving it a $40-50 billion valuation. I think it would never happen in Singapore, and the government will be the first to step in this kind of instances. So, yeah.
That's interesting. And I think you've had the same government or same party govern for most of the time since it's been independent, haven't you?
The entire span, yeah.
Which is crazy.
No change yeah.
And I guess that probably helps in what their direction is, and whereas some other countries they go back and forth. But we'll go to Alibaba, and you mentioned that it's been such a it's such a great opportunity. But one thing that I've read as well is quite interesting is it's got almost Western values in it, because a lot of the investors and venture capital that invested in it are either from, maybe the US, or there's obviously Softbank as well from Japan. So do you think that has given it that extra boost as well?
I think Wait, can I try to break down this question a
Yeah, that's
little?
fine. Sorry.
You mean because of this venture capital and this foreign investments, that's why the company is valued like this today, or?
Yes, and maybe that's what's made it success, helped with its success potentially as well.
I think I do largely agree because at least if you look at it from the genesis of the company particularly, they weren't really supported by their locals, which was quite a sad thing. But I had another story about this, I don't know whether you know this company of Taiwan Semiconductor. I think even for TSMC, it's largely owned by foreign capital. Like none of the locals usually don't buy stock in one of the best chip making companies out there. And I don't exactly know why, but it has transpired this way. But in that instance, I also do agree that companies like Alibaba really do have a very huge focus in terms of trying to raise foreign capital and to benefit the Chinese society. And this actually kind of play right in line with the playbook of the Chinese government to use foreign capital to build their economy. And we can slowly discuss about this entire idea of a VIE structure, about how does this dual listing. But I think the Chinese government today is still largely appreciative of foreign capital's injection. But that said, they don't want companies to be influenced by so-called, they call them corrupted capital. But to me, I think it's just capital that might get into the ways of the government's dealings when this kind of things arises, like when this kind of challenges arises. So that's just my idea on it.
Yeah, and we've seen that over the past few years, haven't we? That you could say we'll talk about it later, but the Chinese government have definitely become a bit more cautious of all of that. So you sort of mentioned that you have the top down, so the macroeconomic, and then look down, and you think China's obviously going the right direction, which I'm sure many people would agree with you. And then you say the bottom up, so actually looking at the company itself. So if we look at Alibaba, the company, what are the things that really attract you to it? And, you know, I think, I don't know if this is true or not, but there's a video there you mentioned that you're almost all in, or I don't know if you are all in the company. So, you know, why is that? What's attracted you to it?
Okay, I think there was this commentary that I seen recently, and I really resonated with it a lot. I think a lot of people that were first attracted to Alibaba as a company was because of its valuation, because it's currently trading at around 130. The lows was at 108. And people started buying the dip when it was like 180, when it was on sub 200. And when they started buying, it started getting worse, and it started deteriorating, and it went all the way. And now people are even speculating that it might go even to the IPO price. So let's put valuation, this chunk of valuation aside. Let's just focus a little bit more on the business fundamentals. Firstly, I think I did alluded to the fact that they already proven their worth. So currently they are the market leader. They hold around 50% of the e-commerce pie. And I do recognize the fact that, hey, during the recent quarter, we understand that a lot of these so-called competitive advantage was due to anti-competitive behaviors. So they essentially just tried to stifle competition. They tried to restrict merchants and have that two choose one thing. But if you were to look at it at face value, attest to the facts, Alibaba today does GMV higher than Amazon. Amazon has a worldwide influence, by the way, and they have around, if I'm not wrong, 1.25 times bigger than Amazon. And if I'm not wrong, if you look at the graph, just on the Singles Day alone, they have the Cyber Monday, Black Friday, whatever combined, and they can't even win a single day sale in China. So in this case, if you were to really think about it, I think the commerce business in China is not slowing down. Even though other people might like to prove otherwise, saying that, oh, GDP is slowing down, Evergrande is defaulting, everybody is not getting their money, and there's getting lesser and lesser jobs. The facts do tell a different story. People are continuously spending money, and the growth doesn't seem to slow down. Or maybe it's slowing down, but it doesn't seem like people are saying that it's going to deteriorate, people are going to not spend money and stuff like that. So that's the disjoint between realities and what people are saying in media. So that's the first part. And on the second part, I think this entire Ant Financial's creation, I'm currently still doing my research, because I do understand that there's this digital renminbi or digital yuan introduction that might be disrupting WeChat and Ant Financials and stuff like that. But if you were to go deep into understanding Ant's business model particularly, I don't see, as of now, I don't see that digital yuan will be a huge disruption till Ant doesn't have any business to do. But that said, being affected will probably have a certain degree of being affected, but we have to attest and we have to evaluate how far this degree is. So that's the second part. And the last part, definitely we have to talk about cloud computing. So for cloud computing, Alibaba is currently still the market leader as well. So they hold around 40 to 45% of the entire market share. And people in the cloud computing space are no joke, by the way. We have Tencent, we have Baidu, and then we have Alibaba, and we have all the other big arms and the big market leaders in China. So in this case, you can see that if you're to do it, if you're to discount it and understand it from a valuation point of view, what you're buying today is just the e-commerce business. Everything else, it's a free gift. So it's a buy one, get two free. And in this case, if the valuations remain low, I think you really have to do, you have to really understand what kind of value you're tagging onto Alibaba as a company. And there's a lot of this idea of delisting and whatnot. I actually do look forward if there is a delisting, which also means that there's lesser volatility and lesser people to spin out some different narrative and to try manipulating the markets again. But of course, it might be a biased view from my side, but I just feel like at this point, it really looks a little bit ridiculous as a retail investor. Because of course, I believe that in order for valuation to drop down more than 60%, a lot of other funds are manipulating the prices of the particular stock. And it seems like a concerted effort to manipulate. So that's just my own idea and take on Alibaba in today's context.
Yeah, and I've listened to a few people and they're talking about how, that they have, I think the last earnings weren't very good, but that's because of their investing so much into this cloud computing and a lot of those, and you look how successful AWS and, Google and Microsoft are in the US, and then them investing in, Alibaba investing into that is where they will see the growth in the next year. And I think that was Larry Chung that I interviewed, and that's what he was talking about.
Yeah.
So yeah, would you agree with that as well?
I think this entire discussion, I was looking at another YouTuber, I think it was Joseph Carlson. He was alluding to this fact that, hey, Alibaba's cloud growth was only a north of 30%. While if you look at Amazon's cloud or AWS, they grow in the north of 50 to 60%. So what does this mean? It means that Ali Cloud is far less superior. They are much lousier. But I think we are discounting the fact that the total addressable market, comparing the two companies, are largely different as well. So I do realize and I do understand and appreciate the fact that US companies and US brands do hold a certain, they are of a higher regard. So they will have a brand premium because the entire total addressable market will be the entire world. Because people believe in the brand, people believe in the governance, people believe in how they govern themselves. So on China, on the flip side, you have to understand that there are only specific countries and specific places that they can penetrate into. And largely speaking, it's their own local markets. I think that's the thing that we can agree on. So in that case, notwithstanding the fact that, hey, there might be a cheaper offering, notwithstanding the fact that, hey, there might be some political tensions going on, but you can see that there are certain developments and developments in the entire Ali Cloud business as well. So the Malaysian government actually took on and employed Ali Cloud to help them do the transition to the cloud for all the government agencies. So this is a positive step forward. So in essence, if you have to think about it, Asian market by and large might be more receptive towards China-related companies. But I would believe that the Western counterparts might be a little bit more jittery when coming to interacting with Chinese-related companies. And I understand where they're coming from. And it's also clear that the Chinese companies don't have any intention to break into or penetrate into the West, into the Western market either way. So they're essentially just operating in their own regime and their own realm and just carry on with the developments that they can do. So in that case, I wouldn't say that 30% is necessarily like it's like essentially just throwing down the verdict that, oh, Ali Cloud just sucks. I think it's a lot more nuanced than that, rather than just doing a plain app, assuming that it's an apple-to-apple comparison, even though they totally address different markets. So that's just my own take on that Ali Cloud business.
Yeah, and I think we're seeing a bit of a divide, aren't we? There's people under the Chinese sphere of influence who might be more likely to shop with China, and there's people under the US who might be more. And we're sort of seeing that more, aren't we? As you said, some countries, Asia, Africa, and maybe the Middle East as well, are going towards potentially more China, which is quite interesting.
Yeah.
Yeah, cool.
I think it's the development of the global powers. I think as much as I don't like to bring in politics when I speak about investment-related content, right? Because I do understand that it might get sensitive and people are unhappy about it. But for people who are avid politics, people who are avid followers of this kind of different developments, especially like all the Olympic boycotts and stuff like that, right? You can clearly see where the alliances are, and you can it will be reflected in the business environment as well. So it's good to read up, but don't get too entrenched and embroiled in all the different discussions there, because it might get heated sometimes and people say harmful and insensitive stuff. Yeah.
Yeah, I agree. And I think, as you said, it's good to know it, but it's being objective and it's being like, I'm not personal about it, but how will this affect maybe investments here or there? And I think that's the way to look at it, isn't it?
Yeah.
Yeah, perfect. And you did say before that Alibaba has had quite a drop over the past year, unfortunately. So since sort of highs late last year, it's gone down about 66%. So sort of what advice, I'm guessing you have same convictions that the company is still going to go up in the long term. But what advice do you have for people who, struggle with their emotions when investing? And if the price went down that much, they would, instantly get out. What advice do you have for them?
By the way, none of us on YouTube are giving financial advice because
Oh yeah, sorry, exactly.
we have no liability insurance. But I think a general thought on really looking at your portfolio and seeing that it's a deep read, right? It really depends on a few key factors. Number one, I think you need to understand what are you investing for. So some people are claiming that, hey, I'm giving bad investment advice. Firstly, I have never given any investment advice. And secondly, I'm just sharing what I've been doing and sharing a lot of my research, a lot of my understanding of the company and some of the nuances that might not be caught in the normal public domain. So in this case, when I do an investment and I start building a conviction, it doesn't last on borrowed conviction. So what if one day I just disappear from the face of the earth and I stop making Alibaba videos? And people who bought Alibaba and bought it because of me, what are they going to do about it? And they can't find someone to gather their strength and whatnot. So in this case, I think you really have to understand and always revisit what your bull thesis of buying that specific company, because we are all in the race and in the journey of picking stocks, right? So we have to go back and understand that, hey, if you want to pick stocks, our main objective is really to beat the market indexes. And the easiest market index to compare to is S&P 500. So let's assume that they do an average return of 10% yearly. And now what you have to do as an investor is when you allocate a portfolio or allocate different capital to different companies, do take note of this and your entire objective of trying to beat the market. And you have to identify what the risk-reward ratios are. And for people that are constantly worried of, this new headline saying that how China is going to delist the companies, this new headlines of how the China-US tension is heightened again, this new headlines on talking about how the VIE structure is going to be banned by the Chinese regulators. All these are all current news, by the way. It happened just within the last month, and you get flustered and you get you start second guessing yourself. I think then you have to look back into what's your bull thesis. And more importantly, this might not be the good investment or might not be a suitable investment for your style particularly. And like I always preach, right? If you can't sleep well at night, then don't bother stock picking. If you feel a lot better in picking an index fund, buying an S&P 500, please go ahead. What I'm doing on YouTube is really just my own understanding and my own research. And it doesn't mean that you should follow. And for those of you, even for people that are subscribed to my views, like they really do believe that China is the next thing, Alibaba is going to be how big and how everyone is going to dominate the industry, it might still not be a suitable investment for you, even though you might be as bullish as me. I think that's the line we have to draw really clearly. There's this entire idea on self-awareness being more important when coming to investing, rather than because there's Palantir is the new thing, or Tesla is going to change the world, that's why I buy Tesla. If you can't contain or you can't manage your emotions to ride through the volatility, then I don't think you should be stock picking. So that's just my 2 cents on this discussion.
Yeah, I agree. And I interviewed someone a few months ago, and he said that it was a really interesting quote, that the stock market is a really expensive place to find out who you are. So, if you, as you said, have that plan beforehand, know who you are, and then from there, follow that plan. Because otherwise it's, and this, as I said, this is advice, but it is easy to lose money if you're not smart with it.
I think I interviewed the other guy. I also interviewed also a big Alibaba and China bull. And he said that through his 10 odd years of investing, he knew a lot better of himself. Right? Any other takeaway, whether it's profits or whether it's gains or whatnot, those are byproducts. I think understanding yourself was his greatest takeaway. And when I asked him to give an advice, like not an advice, but just concluding thoughts about investing by and large, he said that you really have to know yourself a lot better first before you go into the markets. If not, yeah, like you said, it'll be an expensive game.
Yeah, and that was that your most recent guest who does he have 13 million in the Alibaba?
No, it
That was a
was
different one.
previously. It was one guy before. Yeah.
Oh, okay. Yeah, but that was really interesting. That interview with the guy who owns 13 million. So obviously he's got, you know, he's very supportive of Alibaba and what it could achieve.
I think for him specifically, his name is Charlie. So I think for Charlie, through the short conversation that I had with him, it was really the risk reward proportion that really got him interested. He did admit that he's not interested in Chinese stocks, and I understand why a lot of people are not interested in Chinese stocks. But it comes to a point where you just can't get over that opportunity, and you can't lie to yourself that, hey, there's another better opportunity out there. So I think it's really for you to manage your own expectations and also to manage how you are putting money on the table. I think that's my general takeaway.
Yeah, definitely. And as you said, just the valuations compared to, Alibaba compared to say Amazon, the valuation is so different compared to what they're actually producing. But I think we could talk all day about Alibaba. I'm sure you could, but we'll go on to sort of the Chinese stock market. And, for people who maybe haven't invested there before or in Chinese companies, what would you say the differences is between, Chinese Alibaba compared to maybe other Western stock markets?
Okay, I think in the Chinese market particularly, they have two main exchanges. So one is A shares and one is H shares. So H shares are those traded in the Hong Kong exchange, and A shares are the ones that are in the proper, they are called China when So in essence, if you were to really break them down, you need to check with your brokerage firm whether you have access to the different markets. I think those are fundamental groundwork that you have to do when you're an investor. But that said, after you understanding everything, I think the largest portion is a lot of all the big tech firms that you know of, like maybe Alibaba, Tencent, JD. Most of them are all listed on the Hong Kong exchange because they usually gather a lot of foreign capital. They usually get a lot of US investors, even Singapore investors, they all flock towards those kind of stocks. On the flip side, if you have to look at A shares particularly, a lot of the A shares are very China-related stocks. So there might be even state-owned enterprises or state-linked enterprises. And in those cases, you need to do a lot more due diligence because in those instances, you really have to understand what companies you're buying. And even though in terms of accounting maturity, it might not be as matured as the US market as well. But that being said, a lot of the companies that are listed there, even though we like to think that from the Western side, or even I would consider myself as the Western side as well. When we look at the Chinese market, we thought that they've been crashing crazily because all we see is just all these Chinese-related companies that are just constantly falling. But if you were to observe the A shares market, I think quite a lot of them actually did perform decently well, and they all got pretty decent returns as well. So it really shows you the disconnect in the Hong Kong market, like the H shares doesn't mean that it's reflective of the Chinese market, and A shares also isn't reflective of the Chinese market. So in this instance, you have to be more cognizant when you invest in those specific companies. And now I have also been recently researching on a lot of the green energy stocks. So I know that in this entire climate change push and stuff like that, right? I have to be on at the top of my game because I mean, if you really want to look into where the specific emphasis of the Chinese government, at least in the coming decade or so, I think climate change and all this green energy, renewable energy, this focus really takes priority over some of the other national development goals that they have. So that's where probably for my viewers, it will be one of the things that I'll be sharing a little bit more in the coming quarters or so. So that's just my own takeaway.
Yeah, that's interesting. So you're looking, as you said there, renewable energy. Any other industries that you're potentially looking at?
Currently, I'm just looking at the renewable energy portion because I do know that there's a lot of hype around EVs as well, right? So your NIO, your XPeng, your Li Auto and stuff. Because fundamentally, I'm still rather conservative in terms of my approach. I like to there's this age-long debate of growth investing versus value investing and etc. But I really do like to buy companies or buy stocks that really have a huge margin of safety and really just those very simple few rules that I work with. So in this case, a lot of all those EV companies are kind of out of the scope of this kind of discussion, unless they fall crazily as well. But other than that, I think currently, even those clean energy or green energy companies, right, they are kind of blown up quite disproportionately over the last year, especially with this entire tension about how they're going to tax carbon and stuff like that. So I believe that the first wave of capital has already flowed into all these green energy companies. But I'm just seeing whether when there's a retracement, would I be ready to buy into it? Because I really understand those different companies in China particularly.
Yeah, that's super interesting take on it. So you mentioned there Evergrande, which is obviously a very it's a topic that's been used quite a lot, and I think unfortunately they've gone bankrupt recently in the past week or so officially, or they've filed for receivership. So do you think that maybe, we could talk about the macro effects that has and the debt that they have and all that stuff, but do you think that might be an issue or maybe transparency of some companies? So because before the issues they hadn't actually had a loss ever, they were just sort of hoarding onto their properties. So do you think that could maybe people might be turned away because they might be worried if these companies are telling the truth or not, or do you think that was just an individual case?
Okay, I think we that was also a very long question.
Sorry.
I think we break it down. Sure, I think we can break it down into understanding what we are trying to compare. So firstly, you talk about the issue with transparency. So of course, I will have to give credit to a lot of all the Western counterparts where they have a lot of much more matured accounting policies in terms of regulation, in terms of how the government intervenes with and interacts with the business environment. So that's the first portion. Let's not forget that Chinese is still, or at least China is still a developing economy. They don't have too much of all this. They're still trying to figure their way out. They're trying to figure things out. The Chinese regulators, the Chinese government are all trying to figure their way out. So in this instance, I do agree to a large extent that, hey, maybe in terms of how they have contributed to this entire quote-unquote crisis, could have very well been because of a very loose policy. They could have done it a lot earlier. They could have cracked down a lot sooner and stuff like that. But regarding that, it's always a process, right? You can't be expecting China to be an overnight success. Hey, I have pushed out this whole line of regulation. Fear not, this is how we are going to do it moving forward. I think it's always a trial and error. You go into the crisis, you learn it's the same as the 08 crisis. What happened to all the mortgage-backed securities and how they came out with all the different acts and the different policies. That's how people learn, and that's how countries, economies, and civilizations learn. So it's part of the process. So that's all I can say about the accounting and the maturity part. And now when you talk about, hey, what should we do as investors? Can I still trust the numbers that China put forth? Can I still trust how are all the companies reporting their figures? I think other than putting it that way, a lot of people are also questioning whether the GDP numbers of China are even real. Like whether the GDP per capita is real, whether their growth, they claim that it's 5%, is it even real? I think a very important litmus test for those of you who actually want to, or actually bother to understand the ground sentiments, right, is how is the general Chinese people living? Have their standard of living increased? Have they started earning more money? Especially when you have connections or if you know people in China, I think that's the best litmus test you can do. If people's lives are improved, what else can we say that they're not doing a proper job? I think that's something that I cannot get over with. And I do have friends, a lot of friends in China, and that they actually do come to Singapore to study, to work, and I also do have relatives in China as well. So it's true, and for those of you who actually seen China in the early 2000s, 2010s, there is a significant progress. So in that instance, I do feel comfortable that, hey, even though it might not be 5-6%, but I do know that there's certainly some form of growth, some form of prosperity that's being put forth, and a lot of all these people are experiencing the prosperity. So that's the part on China specifically and how we're going to interact with it. And on this idea on whether you feel comfortable to invest or not, the funny thing is I was discussing with my dad the other day. It came across, like we broached this topic. So my dad was initially also quite careful with investing in China. And then he said, hey, even though we know that what was the main point of business people, or what was their main objective? They just want to earn money, right? They don't really care whether your country is third world, whether it's an emerging country, or whether there's corruption being plagued or inherent in the system. Why do people still do business in Africa? Or why do people still go to all the other parts of the world to set up their businesses and stuff like that? So in this case, I think for investing, I think it's that same line and same train of thought. Whenever there's alpha to be generated and whenever they feel like there's an opportunity, funds will still flow no matter what. And like I alluded previously as well, diversification always have its benefits if you look across continents and across countries as well. Yeah, that's on that part. Okay, now let's speak about Evergrande specifically. So if you were to look at Evergrande's case, I would say that from my own preliminary understanding, yeah, they defaulted, they couldn't pay out their bonds and stuff, and there were a lot of different developments, like minor developments along the way, and how they defaulted, then it's not defaulted, then it went back and forth. So from my understanding on Evergrande specifically, the new introduction of all the different policies, like the 3 red lines, and how the regulators are cracking down on all the different property developers, right? It feels like it's self-inflicted. So in this case, if you were to empathize it from the Chinese regulators' point of view, of course, in hindsight, we can say that why do you not crack down earlier? Why did you not start your process of 3 red lines earlier? Maybe you do it 3 years earlier, 4 years earlier. It might not have been this mass and this scale. So in hindsight, we can blame the regulators, we can blame the bankers, we can blame the property developers. But let's keep that argument aside first. But let's just focus on why did the regulators step in and created this policy. This policy enactment, or this step in, or this intervention, is like how in 08, before 08, maybe in 07, the US government says, hey, let's stop all this mortgage borrowing. But it was not initiated by the US government, if you were to think about it in the 08 crisis. But in this case, or at least in this instance, it's initiated by the government. So means the government had different statistics, they had different data, and they realized that, hey, this is getting a little bit out of hand. I think we should do something about it. And they did something about it. Whether the length, the duration, how quick the responses are, all these are up for debate, whether they can do better. Of course, I know everything can be up for debate on how policy responses could have been administered better. But in this instance, the initial cause, or this initial fall of this entire property crisis, is due to the government's action. So it feels a little bit counterintuitive, right? Why would the government, you're having a prosperous country, everything is going well, everybody's earning money, your people are getting properties to live in, your businesses are getting all the money. So what's wrong? Why are you cracking down? And then they realize that, hey, if they allow this bubble to continue ballooning, I think the impact and the severity of that burst would be a lot greater and be of a lot more significance when the bubble really do burst and it's being manipulated by all the hostile people. Like I'm not saying foreign capital, it might be even hostile internal dealings with whoever that is playing the market. So in this case, it feels like the government is doing the quote unquote responsible thing. So when I were to look at it from that lens, and how we always like to believe that, hey, the Chinese government is in control of everything. They have a social credit system, they know who you are, they know where you are, and this is what we like to believe. So the philosophy is simple. If you believe that in good times, the Chinese government have things in control, why do you think otherwise that in bad times, they don't have the ability to control a disaster, a crisis, or whatever? So it feels a bit of a disconnect, right? You think that, hey, they have control, but then they have control until they don't have control, which it's a little bit counterintuitive to me. Because I really do feel that, at least at this point in time, when Evergrande is going to fall, right? I do coin this term on my channel. I predict that Evergrande will fall gracefully. So this idea of falling gracefully means that it's going to be in a controlled manner. They might even have a game plan in how they're going to dismantle Evergrande from now on. Or like when Evergrande start their proceedings, they start winding up and stuff like that. They will slowly be able to disintegrate them and slowly ensure that all the different stakeholders are well taken care of as well. But of course, punishments cannot be, it's not like when your Lehman risk officer, like the Lehman Brothers risk officer, get off with a fat check. No, it doesn't happen that way. I'm quite sure the billionaire founder is going to pay the price. All the different stakeholders that manage to benefit from this will also pay the price. So this has always been the Chinese way of doing it. There should be accountability, and people have to pay the price and be responsible for their own actions. So this is how I predict how the entire Evergrande crisis will eventually play out or transpire in this entire course of this fall. So that's specifically on Evergrande. I think if we were to look back, a lot of people say that, oh, they can't sleep when they invest in China because they're extremely afraid of today. Maybe Chairman Xi is happy, so he doesn't touch the market. Tomorrow, if Chairman Xi wakes up at the wrong side of the bed, oh, all your investments are gone. I think rather than looking at it from that perspective, I think it's easier when you try to empathize him as a person, when you think of it from his position, what is he supposed to do, and what are his ultimate goals. I think those are simple starting points in how to understand why the current government is doing a certain action or introduces a certain policy. So that's just my take on how you should view China moving forward, at least.
Yeah, and that's super interesting. I think you could say that the Chinese regulators, they're very quick to take action. The US are almost the exact opposite. They're very slow. And I think almost somewhere in between would be perfect. Like, not too fast, but not as slow as the US. I think that would be sort of the ideal. And, you mentioned there sort of the prosperity and people, becoming wealthier over the last 20 years. And I guess you could say that, with Evergrande collapsing and maybe people taking less risk with property, that would be able to share prosperity over more. And that's sort of what his common prosperity focus, isn't it? So that might be another thing that he's trying to do.
I think also for this specifically, the baseline of from my understanding, the baseline is simple. Property or housing is supposed to be for living and not for speculating. And Chinese government has been quite irritated by the constant skyrocketing of the price. And then when you were to look at it from the ratio of the salary, the median salary household to the amount of years that they have to pay off their mortgage or to pay off their debt, right? It's getting more and more crazier because the salary doesn't keep in pace with the price of skyrocketing. And just a bit of background knowledge for those of the viewers that know of the Hong Kong price of the property, the properties there are crazy, and it's usually being controlled by a lot of the conglomerates. So they know that, property is a hard asset. They know that even in a crisis, property usually still hold a very good amount of value. So in that case, youngsters in Hong Kong usually just protest because they don't have anything to lose. That's one. And number two is they can't afford to buy properties. They only can rent and they can just try to stock their life into the entire system, which caused a lot of civil unrest, by the way, and caused a lot of problems when normal citizens do not have a stake in the country that they live in. And I would presume that the Chinese government saw this and they didn't want China to become like that, or to become a second Hong Kong, or however that they're trying to speculate and try to monopolize the entire property market by those few individuals or conglomerates. So that's the entire idea on why property has been a very tricky topic and also a very sensitive one.
Yeah, definitely. That's some great insights there. So we'll go on to antitrust, and I think that's been a big thing over the past. I'm sure you've talked about it a lot, and we won't go too in depth in it because I'm sure, so similar to all these topics, we could talk for ages about them. But we've seen a massive drop because of what the Chinese regulators have done, antitrust, potentially delisting from US and coming to Hong Kong or the Chinese stocks. So what are your thoughts on this, and sort of how do you think it will impact the market in the short term and maybe the long term as well?
I think at least in the short term, right, if you were to think of most of the Chinese equities listed in the US, a lot of the weak hands, or people like to call them paper hands, have been shaken out of the companies. So people that actually helped through this entire drop are probably people that really believed in all these companies, how they're able to evolve and come back even stronger after after all the regulations. Funny thing though, I was just scripting for a video. Amazon was recently also fined 1.28 billion in Italy by the antitrust regulators as well for some form of monopolistic practices. So I really don't think that this entire idea of antitrust and monopolistic competition and monopolistic practices and business practices are only like China do not have a monopoly over them. And I would believe that regulators around the entire globe, they are all focused on this entire idea on how to promote fairer competition, to allow for people to compete, and to essentially ask all these big tech companies to sit down and to respect the rule and to respect the different market forces. So in this case, I would say that China is really modeling the way. Is it the right way or not? I think it's up for other countries to decide. But at least they are essentially, you can see them as the guinea pigs or even the lab rats of trying to regulate these big tech companies. And the rest of the countries will just sit around and look at how they do it. And after they do it, they will learn a thing or two from them, what they've done well, what they've not done well, and then they might want to implement it in their own country as well. But I would also venture the guess that, hey, a lot of the regulators are keeping their eyes, or at least keeping a lot of their resources into monitoring this entire space. Just to name a few, Google, Microsoft, Facebook, all these all run a semi-monopoly or pseudo-monopoly over the entire globe. So in that case, how do you promote competition, or how do you respect market forces? I really don't know if these companies continue monopolizing. So in that case, I will believe that a new equilibrium will be reached, and governments or regulators around the world will all have their own ways to try to work around the rules and try to, and as we all know all those kind of lobbyings that happen, there will be, I would strongly believe that there will be a new equilibrium that will be established. But at least for now, I think China has been the forefront of a lot of new sites and a lot of newspapers saying that how they've been cracking down on this, cracking down on that. But actually, if you were to take a closer look, specifically for Alibaba, because I have a vested interest in it, it do seem like they were engaging in some form of really unsustainable business practices. And how do I put it? I wasn't very proud of it as a shareholder, but I do understand where the Chinese government is coming from. And I would believe that by breaking it down, it also is a wake-up call to Alibaba to innovate earlier, to make sure that they're spending their money well, and to make sure that they're ahead of the competition, rather than just trying to force people and try to just exploit their position. So that's not a durable competitive advantage. I would hope that they would focus a lot more on actually establishing a proper competitive advantage. So yeah.
Yeah, that's super great advice. And as you said there, like Amazon and all those US companies are getting it destroyed as well, and all these for antitrust issues and then, uncompetitive stuff. So Chi, thank you so much for joining the What the Finance podcast talk with me. So just on to my last question, sort of what is one message you'd like our listeners to take away from the conversation?
I think this entire idea, I wouldn't quantify it as advice, but really just one strong takeaway is, if you are uncomfortable with investing in China, I think you can do X amount of homework. You can put in thousands of hours of understanding the Chinese government, understanding the different Chinese companies by and large. But if you are still uncomfortable in the different rules that you are playing by, like because they are abiding by different rule system and different value system as well, if you can't resonate with it, I think that it's better that you don't touch them at all, regardless of how cheap the price is. Even if Alibaba is $50 today, I think getting a good night's sleep is definitely better than trying to risk telling yourself that, this is a good investment, this is an investment of a lifetime. So that said, of course, for those of you who are interested, do keep a closer eye in the Chinese market, because I do see a very huge rebound. Maybe not this year, maybe not next year, but the rebound is probably coming. I wouldn't say when, because like I outlined in the entire podcast and discussion, a lot of all these funds really do not have a choice. If you were to think of it from the fund manager's point of view, they don't have a choice to congregate most of their investments in just one country or a few countries. And China being the second largest, or maybe even the largest economy in time to come, they will have a lot of things to answer to if China really start running and they do not have exposure to China as well. So that's just my general gist of what I want to share.
Yeah, that's a great piece of information. So Chi, you mentioned your YouTube channel, obviously. So can you maybe talk more about that, and maybe anywhere else that people could get in contact with you if they wanted to, or follow you?
I primarily I'm operating on YouTube. I don't really create any forms of, I know you do create content on Instagram and even on Twitter and stuff, right? So for my case, I do have a primary focus on YouTube, because I really do enjoy more of the video format. So I'm not very talented in terms of creating audios and creating video graphics and stuff like that. So you can reach out to me on Instagram, on Twitter as well, but I'm not that active on those two social media platforms. I try to upload maybe around 4 to 5 times a week if I'm more free, because now it's the winter breaks. But when school do reopen, I try to still keep the schedule of 3 times a week. So other than that, you can join my Discord server as well if you're interested, and that's about it.
Yeah, awesome. Yeah. And I'll put all the links in the description below. So Chi, thanks again for your time.
It's an honor that you invite me here. Thanks.
Thank you. Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.